Arista Networks stock soars 30%. Is the high P/E justified? Imagine this: a stock that surged by 30% in just 1 month. Sounds like a dream come true, right? That's exactly what's happening with Arista Networks Inc., NYSE, ANET. But here's where it gets intriguing. Does such a dramatic rise mean it's time to jump in, or should you be cautious about overpaying for future growth? Let's dive into the details and uncover the story behind this tech giant's soaring valuation. Over the past month alone, Arista Networks has delivered an impressive 30% gain, bringing its annual return to a staggering 35%. These numbers are enough to grab anyone's attention, but they also raise important questions about whether the stock is now overvalued. For context, the company currently trades at a price-to-earnings (P/E) ratio of 46.4x. To put that into perspective, half of all US-based companies have P/E ratios below 18x, with many even falling under 11x. So why is Arista commanding such a premium? Is it justified, or could this be a bubble waiting to burst? To truly understand Arista's position, we need to zoom out and consider the broader landscape. Artificial intelligence is revolutionizing industries, and healthcare is no exception. Companies leveraging AI for early diagnostics, drug discovery, and other innovations are becoming increasingly attractive to investors. Interestingly, some smaller players in this space, those with market caps below $10 billion, are still flying under the radar, offering opportunities for early movers. Could Arista's success be partially attributed to its alignment with these transformative trends? It's worth pondering. One thing is clear: Arista Networks has been firing on all cylinders lately. Its earnings growth has outpaced most of its peers, creating a sense of confidence among shareholders. This optimism has likely contributed to the elevated P/E ratio, as investors bet on continued stellar performance. However, if those expectations aren't met, current shareholders may start feeling uneasy about the sustainability of the share price. If you're curious to learn more, our latest analysis provides deeper insights into Arista Networks' financial health and prospects. You can access it here at https://simplyWall.st/stocks/NYSE-ANET/Arista-Networks. Additionally, for a comprehensive look at analyst estimates shaping the company's future, check out our free report here at https://simplyWall.st/stocks/NYSE-ANET/Arista-Networks/future. Now, let's address the elephant in the room. Does Arista's rapid growth justify its sky-high P/E ratio? Typically, such valuations are reserved for companies expected to deliver extraordinary expansion. In Arista's case, the evidence suggests it might be warranted. Over the last year, the company achieved a remarkable 31% increase in profits, while its earnings per share, EPS, skyrocketed by 218% over the past 3 years. Clearly, recent results have been nothing short of phenomenal. Looking ahead, analysts predict that Arista will maintain robust growth, with earnings projected to climb by 15% annually over the next 3 years. By comparison, the overall market is anticipated to grow at a slower pace of 10% per year. This divergence highlights why investors seem reluctant to part ways with their shares. They see potential for significant upside in the years to come. So, what's the bottom line? Arista Networks' lofty P/E ratio reflects more than just its current value. It serves as a barometer of investor sentiment and expectations. Our review of analyst forecasts confirms that the company's promising earnings trajectory plays a key role in sustaining this high multiple. For now, shareholders appear confident that future earnings won't falter. Unless something disrupts this positive outlook, the stock price is likely to remain well supported. That said, investing always comes with risks. We've identified one notable warning sign related to Arista Networks, which you can explore here. https://simplywall.st/stocks/tech/NYSE-ANET/Arista Networks. Understanding these factors should be integral to your decision-making process. And if you're hunting for hidden gems, don't miss our list of companies with strong growth histories trading at low P/E ratios. Sometimes, the best opportunities lie off the beaten path. Discover them here. https://simply-wall.st/discover/16455//strong-past-earnings-growth-P/E-ratio-below-20. Lastly, managing your investments just got easier. Introducing our Ultimate Portfolio Companion, a free tool designed to streamline your stock tracking experience. Connect unlimited portfolios, monitor warning signs, and assess fair values effortlessly. Ready to try it out? Start with a demo here. https://simplywall.st/features/portfolio. We'd love to hear your thoughts. Do you agree with our take on Arista Networks, or do you think the stock is overhyped? Share your opinions in the comments below, or reach out directly through our feedback form here. https://investor-research.typeform.com/to/WVG6M Friday #feedback_token equals MZKZMDMZN2OTNKOTQ0OTK1MTK0 and company equals Arista %20 networks, and blueprinted equals 3930334. Alternatively, drop us an email at editorialteam@simplywalls.com. Please note that this article is intended for informational purposes only and does not constitute financial advice. Always conduct thorough research before making investment decisions. ANET's growth in AI data centers, future prospects. The data center boom, can Arista Networks sustain its momentum? The data center industry is on fire, with the AI data center market projected to reach a staggering $60.49 billion by 2030, growing at a compound annual growth rate of 28.3%. At the forefront of this boom is Arista Networks Incorporated, ANET, a company that's been witnessing healthy demand across key verticals, including cloud, AI-focused data centers, and campus enterprises. But here's where it gets interesting. Can Arista sustain its momentum in the face of stiff competition from industry giants like Cisco Systems and Hewlett-Packard Enterprise? Arista's comprehensive portfolio of Etherlink switches, CloudVision, has established the company as a strong player in the hyperscale AI networking domain. Its routing and switching platforms offer industry-leading capacity, low latency, port density, and power efficiency, making it an attractive choice for organizations investing in hyperscale data centers to support complex AI tasks. In fact, prominent organizations like Google, Amazon, and Microsoft are rapidly investing in hyperscale data centers, driving the demand for high-performance networking solutions. To capitalize on this emerging market trend, Arista has been undertaking various initiatives, including the introduction of multiple AI-powered enterprise solutions. Its new switching and wireless portfolio includes a compact, fanless 12-port POS switch engineered to support remote office and branch deployments, as well as a durable Wi-Fi 7 access point designed to operate in hostile and outdoor environments. The company has also expanded the capabilities of Arista CloudVision AGNI, which can now effectively support on-prem deployment, maintain compliance, and ensure secure access for users, devices, and applications. The competitive landscape, can Arista hold its ground? Arista faces significant competition in the cloud networking solutions space, particularly in the 10 gigabit Ethernet and above segment. Cisco Systems, the dominant player in the data center networking market, is expanding its AI portfolio for data centers with new solutions like the Unified Nexus Dashboard, Cisco Intelligent Packet Flow, configurable AI pods, and 400G bidirectional (BiDi) optics. Cisco's data center switching orders jumped double digits year-over-year in the fiscal third quarter, posing a significant challenge to Arista's market share. Another major competitor, Hewlett-Packard Enterprise, recently completed the acquisition of Arista Networks, integrating Juniper's comprehensive range of cloud-based networking solutions, software, and services, including Mist AI, with HPE Aruba Networking and HPE AI Interconnect. This strategic move is expected to accelerate the development of secure, unified networking solutions optimized for hybrid cloud and AI, further intensifying the competition in the market. Arista's price performance, valuation, and estimates. Arista stock has increased by 19.9% over the past year, compared to the industry's growth of 37.3%. From a valuation standpoint, Arista trades at a forward price-to-sales ratio of 14.85, above the industry average. The Zacks consensus estimate for Arista's earnings for 2025 has increased over the past 60 days, indicating a positive outlook for the company's future growth prospects. The verdict: can Arista sustain its momentum? Arista currently carries a Zacks rank number 3, hold, indicating a neutral outlook for the stock. While the company has been witnessing healthy demand across key verticals, the intense competition in the cloud networking solutions space poses a significant challenge to its market share. As the data center industry continues to boom, it remains to be seen whether Arista can sustain its momentum and emerge as a leader in the hyperscale AI networking domain. What do you think? Can Arista Networks sustain its momentum in the face of stiff competition? Share your thoughts in the comments below. The future of Arista Networks, growth and opportunities. Imagine a top-performing stock that has consistently outpaced the market, with a growth trajectory that's nothing short of remarkable. Arista Networks, ANET, has been one such standout, ranking as the 15th best stock over the past decade according to Macro Trends. This impressive performance can be attributed to its extraordinary growth rate, averaging 29% in quarterly revenue over the past decade, a staggering increase that has nearly expanded its revenue by 900%, as per Y charts. The past decade witnessed a seismic shift in computing and software, with a massive migration to the cloud. This megatrend propelled Arista Networks to significant heights, as its largest clients, Microsoft and Meta platforms, invested billions in building out extensive data centers, fueling strong revenue growth for the company. As we look ahead to the next 5 years, another pivotal trend is set to unfold: the continued rise of artificial intelligence, AI. AI is currently experiencing its moment in the spotlight, with applications ranging from AI-driven search summaries to AI-generated art, and even AI-enabled conversational tools like ChatGPT. Businesses are increasingly leveraging AI automation to enhance operational efficiency. However, this AI boom comes with a significant challenge. In recent months, the surge in AI applications, such as the Ghibli-style art trend, has overwhelmed OpenAI's graphics processing units, GPUs, highlighting a pressing need to build out AI infrastructure. According to McKinsey & Company, AI infrastructure spending is projected to reach an astronomical $6.7 trillion by 2030. While this figure is subject to debate, it's undeniable that cloud computing giants are committing hundreds of billions of dollars to meet the soaring demand for AI. Here's where Arista Networks comes into play. As a leading provider of cloud-based network solutions, the company is well positioned to benefit from the demand for AI data centers. Its revenue has more than tripled over the last 5 years, underscoring its strong market position. Despite strong demand boosting Arista's operating margin to an all-time high, concerns arise about potential growth slowdowns and margin compressions, factors that could impact stock performance. However, given the ongoing investments in AI infrastructure, it's unlikely that Arista Networks will be caught in a cyclical downturn. Instead, the trend still seems to be favoring the company. A crucial question arises: can Arista Networks' top line double in 5 years? With management estimating a market opportunity exceeding $70 billion, and this year's revenue projected at $8.2 billion, there is significant room for growth. Assuming a 17% growth rate in 2025, followed by a more modest 14% annually, it's feasible that Arista's revenue could nearly double by 2030. This growth could sustain the company's stellar profit margins. Currently trading at 45 times its trailing earnings, Arista Networks stock is not cheap. However, its leadership position in a crucial growth market justifies its current valuation. If growth reaccelerates, as it has in the past, the potential for revenue more than doubling in the next 5 years becomes even more plausible. Thus, while Arista Networks stock may seem pricey, it's poised for sustained growth driven by robust market trends. This bodes well for shareholders looking forward to continued positive returns. And this is the part most people miss. The underlying trends driving Arista's growth are not just about AI, they are about the fundamental shift in how businesses operate and invest in technology. But here's where it gets controversial. Will Arista Networks maintain its growth trajectory, or will it face challenges from newer entrants in the AI infrastructure space? This is a question that will spark debate among investors and industry experts alike. We invite you to share your thoughts. Do you believe Arista Networks will continue to ride the AI trend to new heights, or are there concerns about competition or market saturation?